Vietnam's textile and footwear export targets for 2026. The outlook for Vietnam's textile and garment exports in 2026 is expected to be less favorable than in previous years, despite continued growth in global demand. A notable factor is the slower pace of recovery, which is narrowing the room for order expansion and forcing exporting countries to shift from parallel growth to intensified competition for market share. According to industry enterprises, global textile and garment demand in 2026 is projected to grow by only about 3%, significantly lower than the roughly 6% growth recorded in 2025. As market expansion slows, competitive pressure on pricing and market share is becoming increasingly evident. The United States remains the largest export market for Vietnam's textile and garment sector, accounting for more than 37% of the industry's total export turnover. However, tariff policies and consumer spending pressures are making U.S. retailers more cautious in placing orders, while increasing demands for price reductions and cost sharing with suppliers. As purchasing power in the US shows signs of stagnation, major exporting countries are shifting toward traditional markets such as the European Union, EU, Japan, and South Korea, intensifying competition in these destinations. In the EU market, Vietnamese enterprises face competition from Bangladesh due to preferential tariff advantages, while China is expanding exports to the region amid difficulties in the US market. Japan remains a stable market with annual textile and garment imports valued at approximately USD 17 to 20 billion. However, slow growth and stringent requirements make it difficult to expect significant export breakthroughs. South Korea has also yet to experience a strong recovery due to economic and geopolitical uncertainties. Market fluctuations are quickly reflected in production activities, with shorter order confirmation cycles and increasing price pressure. In this context, digital transformation, productivity improvement, and enhanced management capacity are becoming key solutions for enterprises to maintain their position within global supply chains. Compared with textiles and garments, the footwear sector enters 2026 on a more stable footing thanks to positive growth performance in 2025. Strong export growth in footwear and bags during the final months of the year demonstrated that Vietnamese enterprises continue to be recognized by international partners for their manufacturing capacity and reliability. The United States remains the largest export destination, with export value exceeding USD 11 billion, while the EU ranks second with approximately USD 6.9 billion and represents the most demanding market in terms of environmental, labor, and social responsibility standards. Logistics hubs in Europe such as the Netherlands, Belgium, and Germany are playing an increasingly important role as distribution gateways to the wider region, reflecting the deeper integration of Vietnam's footwear supply chain into global trade networks. In addition, markets under the Comprehensive and Progressive Agreement for Trans-Pacific Partnership (CPTPP), including Japan, Canada, Mexico, and Australia, are emerging as new growth drivers, helping diversify export markets and reduce dependence on a limited number of major partners. Effective utilization of free trade agreements is gradually becoming an important competitive advantage for the industry. Another notable trend is the shift from contract manufacturing toward higher value-added production. Although domestic enterprises are generally smaller in scale than foreign invested enterprises, they are recording faster growth rates, reflecting efforts to expand market share and strengthen production capacity. Nevertheless, the footwear industry continues to face long-term challenges, including price competition from imported products, particularly from China, as well as increasingly stringent requirements on traceability and green manufacturing. To achieve export targets in 2026, the industry needs to increase localization rates, develop supporting industries, and invest in technology to meet international standards. The year 2026 is expected to be a challenging period for both the textile, garment, and footwear industries as the global trade environment shifts toward competition based more on adaptability and supply chain quality rather than production scale alone. Vietnam's advantages lie in flexibility, credibility, and long-term supply capability. As two of Vietnam's key export industries, textiles, garments, and footwear will continue to play an important role in achieving the country's export target of USD 1 trillion if they maintain stable growth momentum.